We were equal parts surprised and delighted to see this morning that ARK has debuted a venture fund. And for the first time ever, they say they're going to bring venture capital to everyone. And this solves a lot of pain points that we've talked about in the past. These startups will be handpicked by the legendary Cathie Wood. And you can see that today, the shares of this fund are available for trading. And one of the reasons that we're really excited about this is because we have never been able to find a viable way to invest in, let's say, to get venture capital exposure for retail investors. So you have equity crowdfunding that's best avoided, particularly because there's no liquidity, and also you're not investing alongside venture capital firms. In the best case scenario, you can expect 90% of startups to fail, so you certainly need some seasoned experts to accompany your mission to find the next Tesla in the startup world. There are secondary markets like Forge and EquityZen. These will have prohibitively high minimums, and what I mean by that is if you're going to invest in startups, you probably want to hold at least 10, since 9 are likely to fail. So if the minimum requirement to invest is $20,000, then just to hold the minimum number, it would require $200,000. And if you wanted that to be only 5% of your total portfolio, then you can see where that creates a problem. So that's largely put retail investors off limits when it comes to secondary markets, not to mention the accredited part, which we'll talk about a little bit later. Then you have publicly traded VC funds. These aren't very efficient. They don't seem to offer the sort of exposure we're looking for in this alternative asset class, which is the fact that it's not correlated to the equities market. So platforms like Securitize have promised to change this using blockchain, though you don't necessarily need to use blockchain to solve the problem. So when you start going down the path of ARK's email, 3 clicks later, and you're at a website that's run by a firm called Titan. As of May of this year, they had over $750 million in assets under management, more than 60,000 users with an average account size of $12,500. They have various types of alternative assets on the platform. We haven't looked at them before. We'll probably look at some of the other offerings they have, like some private credit from Carlyle, real estate portfolio from Apollo. There's some interesting things on there, but today we're going to talk about ARK's offering that debuted on this platform. So we talked about accredited versus non-accredited. Either type of investor can use this platform, and that's great news for the majority of individuals that aren't accredited. And you can see this great chart by ARK that shows a breakdown of people who have stock ownership and the percentage of those who are accredited. So it's quite low. When it comes to the portfolio, this is where things get a little bit interesting. So you have this notion of a 5 to 10 year horizon. That's great. Target assets, of course, venture capital focused on late stage private companies. Anywhere from 50 to 80% of their investments, in at least VC investments, will be in late stage, and the other will obviously be earlier stage. And then they talk about public equity, which is a concern. We'll talk about why. And also early stage venture capital funds. Well, we're not fans of the fund of funds setup because you end up being taxed twice. But when they talk about the targeted number of holdings for this fund, they say we're going to hold 15 to 30 public companies and then 25 investments per year in private companies. You may wonder, why are they holding public companies in a venture fund? Well, they give 3 reasons. The first is that there may be periods where valuations are at odds. So the stock market will be discounting firms that actually have a higher valuation than what the market has ascribed. This is similar to how we did a recent piece, I'll put a link to it in the description of this video, on the valuation of SPACs compared to the last private funding round. It's certainly a benchmark that you can use, but at the end of the day, they're still investing in assets that are correlated to the broader equity markets. A big appeal about holding startups in our portfolio is the diversification effect. They're an alternative asset class that's very loosely correlated to the equities market over time. Second reason ARK gives, they can hold shares throughout the life cycle and benefit from valuation throughout life, okay? And then this third one is the most telling. It says we can use some public companies for quarterly redemptions so that we can offer liquidity. And you see there, what's happening is that gives them the ability to have liquidity in a fund that is holding very non-liquid assets, shares in startups. So what public companies will they include? Well, we did this analysis in May of 2021, which shows the commonality of stocks found across ARK's largest ETFs. This was in the heyday times. Well, we did the same analysis earlier this year. Look at the concentration of names across all 5 ETFs. It's increased significantly. And there were some questions there. Is Teladoc really a fintech firm? Or is UiPath, does that really belong in the space ETF? So you can see what's happening here is that when you're managing a lot of different funds, holding a stock in multiple funds is certainly advantageous for liquidity. So we're very interested to see just what public names ARK is going to include in their venture fund and whether or not there's overlap with their other ETFs. So speaking of liquidity, this is a continuously offered, non-diversified, registered, closed-end fund with limited liquidity. Now, when it comes to elements of liquidity, if you're a long-term investor, such as we are, this isn't overly important. What's very important is the quality of names in investing alongside institutional investors. So when it comes to liquidity, only 5% of assets can be liquidated in any given quarterly window. And the amount that you request, if that exceeds that amount of money that can be liquidated, then you just get a proportion of what you requested. And then the fund will be closed upon the discretion of ARK Invest. So that would be a good time to talk about what you're paying for the fund, fees. And this first sentence is relevant to people who understand how fee structures work. The second sentence in red is the key takeaway. Any investor in the ARK Venture Fund can expect to pay 4.22% per annum as a fee. And they've provided this diagram that shows how this fixed fee actually benefits investors compared to the traditional way that venture capitalists will charge for their funds. So the big question, of course, is what's included in the venture ARK's venture portfolio, and they only disclose 5 names. They will disclose the holdings and weightings on the first business day of every month. That means next Monday is the first time we'll get to see, but in the meantime, they provide us with 5 names. A number of these we are familiar with: Freenome, blood tests for early cancer detection; Flexport, perhaps the most exciting name of the 5 that's doing global trade. You have Epic Games, the operator of Fortnite and the producer of the Unreal Engine; Chipper Cash, some frontier markets exposure there with the African cross-border payments company; and then Mosaic, we haven't covered them before. They're working on improving the efficiency of neural network training with algorithmic methods. And all of these investments are they've said to have been made in September 2022. So when we look at a firm like Flexport, this is rather exciting. They have very strong revenue growth. There's a lot of potential there. And look at this number. It's so interesting. They moved $19 billion in gross merchandise value in 2021 for clients across over 100 countries. And that gives them about a 0.3% market share in the global market for freight forwarders. And you could see how fragmented that market is in the right-hand side here. They're clearly using technology to do things better than everybody else, which is why they have the revenue growth that you see in the chart on the left. Freenome is another company that this brings up a question about how the choices of companies will complement firms that you may already be holding. We're holding Gardant, and incidentally, through an investment in Illumina, also Grail. And you can see here that Freenome competes with both in the early screening market. But you also need to remember that we've just looked at 5 names and they plan to invest in 25. So we really haven't gotten a very good look at what ARK actually holds, and we'll need some time to see what we're actually getting exposure to. We have concerns around the percentage of publicly traded firms that they will allow, because we don't want that exposure. We want alternative asset class exposure. And we can expect there to be some growing pains from a pioneering fund that definitely solves many pain points for retail investors looking for VC exposure. So very excited what ARK has debuted today. Please put your comments in the comment section. We'll link to the appropriate research pieces that we used to produce this video. And thank you for taking the time to watch this today.